Hello everybody, welcome to the Fundamental Analysis webinar with AvaTrade. My name is Troy. I'll be presenting. As we get going, I'd like to do a quick systems check just to make sure you're hearing me clearly and seeing my screen all right. Just type OK in the chat box if all is okay. All right, great. I've got enough responses. Looks like we're up and running fine. If anyone has any issues as we go along, please let me know. As always, keep in mind that no one trade is guaranteed to have profit. Each and every trade that you take has risk involved. There are ways to help control that risk, obviously with stop loss settings, manage your trade sizes, etc. So you want to be aware of that and manage risk in a way that makes sense for you. The other side of the coin is each and every trade has a good potential for profit. And that's why we're all here, to look at some fundamental strategies. We'll look at technical strategies as well on the charts to come up with a plan that hopefully will improve your chances of going after those nice potential profits that exist. Keep in mind as we go forward that what we cover is meant to be educational and not to be taken as financial advisement. Now, real quick, what is fundamental analysis before we get on the live charts? Basically, it's the news, the headlines, the economic reports, all of this information that's coming in that hopefully helps you decide which way you think the market will go for particular instruments. And there are a couple main types of fundamental news that we tend to talk about. One would be regular economic events, like some of the data that came out today, the housing numbers out of the US, the numbers in terms of sentiment coming from the shoppers. We'll take a look at that, both by the way of those reports that came out were better than expected. And so we'll take a look at that. Those are examples of regular economic events. We know exactly what they'll be, when they'll be, etc. We don't know the exact outcome, but we know the topic and the timing. The other type of fundamental news then would be kind of the opposite of that, not knowing exactly what the topic will be or when the headline might come. We refer to this as extraordinary economic news. And so it could be a headline about anything. You know, for a while there, it was breaking headlines about Brexit. You didn't know what the headline would be. Then it was about the pandemic, and on and on. Election season, there were all kinds of unexpected headlines, etc. So this is the other type of fundamental news. And even though you can kind of get surprised by the headlines, you can still have a trading plan and risk management plan that accounts for that. And so we'll talk about ways of doing that as well as we're going through the session. And if you have any questions, you want to give any input as we go along, please feel free to do so. So let's take a look first at what's the sentiment today fundamentally. We'll look at some headlines. We'll take a look at how our platforms that we have here at AvaTrade, our web trader, AvaTrade Go, how they can assist you with your fundamental analysis and technical analysis, by the way, as well. We'll get on the live charts. We'll apply the fundamental news to the movements. It'll be the final thing that we do. So real quick, only takes 5 or 10 minutes to get a feel for what's the sentiment for the day, to get an idea of, you know, what direction might I prefer to trade. Now, we see some positive headlines. S&P 500 hits record high on tech strength. It's earnings season, and so that's why it says earnings cheer. So there have been some good reports coming out from companies, especially the tech industry, that caused Wall Street to rise quite a bit today. What you'll also notice, though, as you look down here, you see, okay, everything's in the green. US 30, US 500 futures. The Dow Jones is the US 30, S&P 500 is the US 500. So these are the same instruments, the futures, and then also the standard indices. When the markets opened, they went green as well. But one thing has happened since earlier, just a few hours ago, they were further green than what they are now. So there was some optimism from these headlines, but what has held true all day is the VIX index, which measures fear, volatility, has been actually up. And usually that doesn't happen. Usually you don't have the volatility index, the fear index up, and also the stocks up. Usually when fear is up, stocks are down, and vice versa. When fear is down, stocks are up. So it's not so often that you see all of these green at the same time. The stocks and indices are up, fear is up, and also the strength of the US dollar is up. Usually when fear is up and the US dollar is strong, usually the markets are pulling down. And so we've got a situation here where something has to give. And what we've noticed over the past hour is the indices have started to pull back some, and the volatility index has risen even further. It was only up 2%. 1.5% through the day, as the futures were pretty strongly in the green. As the US market opened, volatility actually rose quite a bit, and US dollar strengthened a little more, and we see the indices starting to pull back. So that's something that we can see right away. Even though there's positive headlines, there's fear and volatility still on the market. Okay, crude oil higher. Strong probability of $100 per barrel. Well, that's interesting. Goldman Sachs called it, a couple weeks ago. They said they expected 95 a barrel, something like that. And so this headline kind of agrees with that. And so do the charts so far. It hasn't reached 100 a barrel or 95, but oil is bullish today. And so that also is a little bit different. Usually when there's fear on the markets, and the US dollar is strengthening, a lot of times oil will pull down with the strength of the US dollar pulling it down. But what we see today is the fear about a small supply of crude oil. There's not enough supply for the rising demand as economies are coming out of COVID. It's actually driving the prices up, and the OPEC oil producing nations have only a small increase in production that is thought to be agreed upon coming soon. So not enough to keep up with the rising demand is the thought. That's what the article goes on to tell you here. So we understand why crude oil would be rising fundamentally. Then we look and we say, this is a big deal. Consumer confidence higher than expected, okay, in the US. New home sales higher than expected in the US. So it isn't that people aren't spending money, at least in the US, right? Largest economy in the world, and home sales are rising. Now, that might lead you to believe, well, there could be inflation fears then, right? If new home sales are larger than expected, well, okay, that can increase demand, can also increase price eventually too. And there have been some fears about inflation. If you remember, there's this supply chain problem around the world and in the US as well. There's just not enough truckers. They're not wanting to work right now for whatever reason. They can't hire enough. And so, as we see, new home sales hitting a 6-month high, median price staying above 400,000 USD, again, inflation. There's no end. The next headline says there's no end in sight for the labor shortages as the US companies are fighting high costs. So the cost of things it's going up, inflation. House prices are going up, inflation. The economy's doing strong and the stock market's happy, but there's fear on the market. So we understand why the stock market's going up. Tech stocks are doing really good on their earnings, but fundamentally there's fear as well. Fear about inflation, fear about high cost for companies. They can't hire enough people right now for all the demand that's out there. Perhaps there was so much stimulus, people have extra money and aren't looking to work for the lower wages that companies can afford to pay. So the cost of labor is going up perhaps. The unemployment rate in the US is very low, but so is the hiring rate right now because companies just can't get people to fill the positions they need. So this is where fear is coming from, supply chain fear, some fears about inflation, labor shortages, but also optimism because the earnings season is doing so well. Okay, so far with the tech stocks specifically. So then we say, what's the sentiment? The sentiment is mixed then, right? We understand why there's a surge up, but we understand why there's a lot of fear and strengthening of the USD then with that fear as well. And the US dollar tends to be somewhat of a safe haven currency. When there's fear on the markets, it tends to strengthen. And we see both of those things happening. US dollar strengthening right now, the fear index, the volatility index rising through the day. So something has to give. That's the feeling as we head on to the charts then in a moment to look for some potential trade opportunities. Now, a couple things I want to show you that can help with your risk management and your fundamental and technical analysis. You can use our web trading platform, which you log into here, and we'll do that in a moment. You also can use our AvaTrade Go mobile app, which has the same features that help with risk management, fundamental technical analysis done for you, and you can find it in the app and on our web trader. And these platforms trade right on your MT4, MT5 accounts. So you get the benefit of the special features, and still you can place the trades that will end up showing on your MT4 and MT5 accounts. So you trade on those right from our app and platform. Now, Ava Protect, that's a special feature that can help with risk management for a small premium cost. You can protect against any losses for defined time periods, by the hour, by multiple hours, by day, multiple days, etc. And so very cool features, very helpful for risk management. If you program the take profit and the stop loss, it immediately tells you based on the trade size you have up here, it tells you how much you're risking to your stop loss price, how much you'll make to your take profit price. And the web trader does the same thing. I'll show you exactly how that works in a moment. So very cool features that make it just easier for risk management, makes it faster to calculate potential profit risk and to set up your trades. And so if you log in here, you'll be in our web trader, which looks like this. And if we go to an instrument like gold or FX pairing silver, we'll see that they have Ava Protect, and all of the instruments have the other features as well. So I don't know, maybe I want to trade 10 ounces or 15 ounces. And I'm looking immediately, it tells me, 15 ounces is this lot size. It tells me how much is required for margin to open the trade. So I can look and see, okay, yeah, I've got enough in my account for that. I can say, okay, how much am I risking? If I'm buying on gold as an example, and I want my stop loss, let's say at 1750. Okay, so I put it at 1750. Now I know, okay, I'm risking 632. Okay, well, I know, if I was looking to risk, I don't know, 2%. Okay, 20% would be 2,000, 2% would be 200. So if I'm looking to risk 2% as an example, or whatever percent you outline for your risk management plan, then I can really quick say, okay, I know I want to risk 200, and I look and I say, wow, with a stop loss that far away, I'm risking over 6%, right? 6.35% to that stop loss price. So then I say, maybe I should lower my trade size, and I realize, you know what? If I want to risk only about 2%, which is 200 if you have a balance of 10,000, then I see real quick, I better trade only 5 ounces if my stop loss is at this price. And so the risk management is easy. I can understand before I place the trade how much I'm risking to my stop loss, and my take profit, same thing. Maybe I think 1850 is where I want to take profit. I type in the price and it tells me right away how much I would make to that price. And I say, okay, I'm going to make a little more than I'm risking, and maybe I'm happy with that, and I place the trade. Okay, so makes risk management really easy. You also have the option of Ava Protect. Maybe I say, maybe there's a big announcement later today or tomorrow, and I think, wow, gold could really go flying, $100 an ounce even, we've seen sometimes with major news coming in. And maybe I think, there's a lot of inflation fears, and if there's, imagine if tomorrow was NFP announcement day or some other large announcement we've got coming in, and you say, wow, if I protect this trade for 1 day or 2 days, it's only going to cost me $44. But if this goes even $10 an ounce the right way, I make 50, more than what the premium costs. And you see gold move $10 an ounce in 5 minutes, let alone in 2 days, right? And if it goes flying the wrong way, you don't lose anything for these 2 full days of protection. You're only down the premium that it cost you. And so in that regard, you might say, you know what? Now I can trade bigger. I can go after a larger profit. Maybe I do that 15 ounces I was talking about. And look, I'm only risking less than 2%. I'm risking 134.95, 1.3% of my balance in this example. And I can go after a much larger profit. And I can wait 2 days and I'm covered for 2 days. If it's dropping the wrong way, when the protection ends, any negative floating gets added to my account from the protection. I'm only down the premium. So very cool features for risk management. Talk to your account managers if you need some practice with this or help on it. You also can practice on your demo accounts. But I think it's important to show this as we get going because risk management is such an important part of your trading plan. And a lot of beginning traders kind of overlook that a bit and take trades with trade sizes that they're really not sure how much are they risking or what's the potential profit. And this helps make sure you won't make those mistakes. Okay. Now, since we're talking about fundamental analysis, if you go to Trading Central, which is also available on the app, on the AvaTrade Go app, if you go to Trading Central, you can look at the economic calendar, which we looked at on a different website already, but you can look at it here. You can look at analyst views, which gives you live technical analysis signals coming in on crypto, on Forex pairings, all kinds of instruments listed there with live signals coming in for free. It's a premium service for free. You get free signals and they're time-stamped. They give the rationale behind everything. I'm on a demo account, so it's not popping up. You'd want to be on a live account to use that feature. And then also Market Buzz is another one. Okay, if you click on Market Buzz, and here I can switch to a live account very easily. If you have a live account, real account, and you can look at all these different features. Okay, and so Market Buzz brings up articles on the most trending stocks. So very cool features you should check out, and make sure that you're taking full advantage of the information that we can give. And you see it's only available to funded accounts or live accounts. So make sure if you don't have a live account, get something in it. If you're not investing a large amount starting out, it's okay. Get something in your account so you can check out all the features and understand everything that's there to assist you. Okay, so let's go ahead and jump on the MT4 platform. I think a lot of you are using the MT4 and MT5, so we should take a look at this as well as we go through our strategies. And right now I'm looking at crude oil. We're on 4-hour candles, and we see if we go to 30-minute candles, crude oil has been rising pretty much all day today. Okay, these are 30-minute candles up. It had a pullback and up again. Fundamentally, and this is why fundamental analysis is so important, we understand why crude oil is rising. Even with all the fear that we see on the market, volatility index up, oil is rising. Even with a strengthening US dollar, oil is rising. Why? Because of supply-demand fears. Yeah, sure, I can show some pending orders. Buy stop, sell stop, definitely. So, and buy limit and sell limit. Those are the other types of pending orders. So right now we understand why there's an uptrend. And if I go to say 5-minute candles, I can see that there's a resistance level here on crude oil. Okay, and so let's give an example of a buy stop since that was requested. You could be looking at this and say, well, there's a resistance level here. It's hit this price and it didn't keep climbing. So you might say, all right, if it breaks ahead of this resistance level here, then I think maybe it'll rise to this resistance level up here. Okay, another almost 60 cents up. So you could put a pending order that if it breaks this first resistance and hits a price here that you want to buy, and then you could have your take profit at the next resistance level up here. why would you prepare to buy now instead of selling from that resistance level that it's just under on the 5-minute candles? Why not sell from this high point? The fundamental news is telling us, hey, oil is supposed to keep rising. So maybe we wait for confirmation of a continued uptrend, that if it breaks this 5-minute candle resistance by enough, then you buy. And so that's the idea of a buy stop pending order. So if I click on new order, switch to pending order, and go to buy stop. Okay. In this case, I'm waiting. If the price hits, let's say 85 even, then I'm buying. And you'd say, well, why would you buy from a higher price? If you think it's going to go up, buy now. Why wait till it goes higher to buy? And I know intuitively you want to buy from low points, but the idea here is you're waiting for it to break through the resistance to confirm a further uptrend, to make sure it wasn't just going to pull back now from this resistance it's at on the 5-minute candles. So you're waiting for it to break through this resistance level where it hit and dropped and tried to come up and dropped and tried to come up and dropped. If it breaks that resistance, combined with today's fundamental news where there's predictions of $100 a barrel and supply problems, not enough supply for the growing demand for oil, etc., all this bullishness fundamentally on oil, combined with if it does break this resistance, then maybe if it hits this price up here, you expect it to surge towards 90 a barrel, right? After confirmation of an uptrend. So that's the idea of the buy stop. Buy once it confirms further uptrend. So yes, you're buying from a worse price, from a higher price with a buy stop, but the idea is waiting for confirmation of an upward movement before buying. Doesn't always work out, by the way, but that's the concept with a buy stop, and combining it with the fundamentals is what we're doing right now. Where would you put your stop loss? Then maybe back below this broken resistance, because if it broke back below it, you'd say, okay, it was a false breakthrough maybe, and here it comes back down. So maybe your stop loss is down at 84.75 or 84.50. If we want to say 84.50 or so, then we're risking 50 cents. We're risking 50 cents a barrel. I was going to say $1 a barrel. It's 50 cents a barrel to the take profit. I'm sorry, to the stop loss. I'm getting confused here. 84.50 to the stop loss. It's a lower price. Okay. And the take profit, let's say we want to go 2-to-1 potential profit to risk. So then we want to go up $1, which would be 86 a barrel. Okay, to the take profit. And so I placed the pending order, and there we are. We're waiting to see if it will go up and break the resistance. Okay, this is the stop loss line, but it's not going to lose anything yet because the trade didn't open. It will only open if it breaks through the resistance. And you see, if we would have bought right now and said, why wait for it to go higher? Well, now we'd be losing. It's dropping from that resistance. So that's the idea of the buy stop, waiting for it to break the resistance before you buy. So that's an example of the way to set up and the concept explanation of a buy stop. So that was requested by Mohammed. Now, at the same time, could you say I'll also sell on a market move on crude oil? You could. It's at a high point. It's showing that it's having trouble breaking the resistance. We know fear is up. The US dollar is strengthening, which also could help pull oil back down. So at the same time, I prepared a buy stop if it breaks the resistance. I also could say I could do a market move, okay, to sell on crude oil and put my stop loss on the sell position above the resistance, right? So that's a technical move. Selling from just below the resistance with the stop loss above the resistance, that's a technical analysis move. But it's not so fundamental, because the fundamentals are telling us crude oil is supposed to keep rising, right? So you can see the difference between a fundamental trade and a technical trade. And there's no reason why you can't do both. I'm simulating a sell position from below the resistance because perhaps the strengthening US dollar will finally pull crude oil down with the fear that's on the market, And even though the expectation is crude oil could keep climbing in the longer term. So there's nothing wrong with doing a market move based on the technical analysis. And one part of the fundamental news, that is the US dollar is strengthening, and preparing a pending order on the other part of the fundamental news, that if you get confirmation of an uptrend, well, then you're going with the predictions that, hey, oil is supposed to keep rising. Okay, so diversifying your strategy within even the same instrument can pay off sometimes. Okay, so we get in on a small market sell. We're waiting to see if there's a breakthrough. We get in on the breakthrough in the opposite direction, and it hits your stop loss before that ever happens anyways. Okay, and by the way, don't pay attention to my trade sizes. Obviously, this trade size wouldn't match the balance I have here on my demo. I would be trading a much bigger trade with a balance of 107 or 108,000 USD. I would probably be trading one full lot, something like that, 1.5 lots, maybe even 2 lots, to have a 1% risk or a 2% risk. These trade sizes might match $1,000 balance or something like that, depending on how much you want to risk per trade. But what's important here is that we're going through the concepts and the strategies of what would you do here in terms of trying to match up the fundamentals with the technicals and taking trades that make sense. Beverly, I'm not sure which chart you're asking. You're asking how show you how I got to the chart. You can expand on that, and I'm happy to show you. Okay, so an example of a sell stop is the same as what I just showed you, but the opposite, right? If you would prepare a sell stop to sell from a lower point. Buy stop, buys from a higher point, pending order. A sell stop, you would prepare somewhere down here that if it goes low enough, you think then it'll keep going lower. So the sell stop is a pending order that will only sell if the price drops to that price, then it sells. Okay? The same concept as the buy stop, but in the opposite direction. It doesn't fit this setup to do a sell stop. That's why I showed the buy stop. Okay, so let's look at maybe another instrument, perhaps gold, and see what's happening technically here. And let's talk about the fundamentals behind why the movements have occurred like they did. First of all, gold tends to drop when the US dollar is strengthening. It's just the way it works. Not always, but most of the time, the US dollar, when it strengthens, gold is pulling down. And when it weakens, gold is going up. It happens very, very often. And you might say, well, why specifically gold as that relationship with the US dollar? Not just because it's paired against it, but also because gold tends to be the #1 safe haven for inflation fears. And so if the US dollar is expected to weaken a lot, that's what inflation is. If a currency weakens, then everything costs more because any one of that currency is worth less. You need more of them to buy the same thing. So when you go to the grocery store or to buy a house or whatever it is, and all of a sudden you need more of that currency to buy the same thing, that's inflation. It means the currency got weaker and you need more of it to buy the same items. And so in the US, grocery prices have had rapid inflation, housing prices have had rapid inflation, and so there are still inflationary fears out there. Today, the US dollar has strengthened a bit, but overall, there's been a lot of weakening over the past year of the US dollar, a lot of inflation. And so that's helped to drive gold up. So if there are inflationary fears, gold tends to rise. Today, with the US dollar strengthening, we saw gold pull down, but now we see a recovery back up. Okay, gold has risen back up from 1780 or so as a low up to 1793. Okay, now if we see the volatility index was up, US dollar was strengthening even further, then you might expect gold to potentially pull back down. Okay, if there are supply chain fears and that's going to hurt the economy, then maybe the US dollar strengthens with that type of fear. So if that's how you feel, you could be looking to short gold at this resistance level that it's trying to break through right now. Okay, this was support, 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 and it came up. Once it broke it, it took a lot of momentum to break below there. It did that today. Look at the momentum down that it took. You can tell momentum from the size of the candle. Look how much bigger this candle is compared to all of these others. And so this was a breakthrough candle with a lot of momentum, which carried all the way down through the next candle. A lot of momentum to get below this price. So to get back above this price, you would expect it would take the same type of momentum, meaning a breakthrough candle. So we're in a situation where you could say, okay, same thing, kind of the same as crude oil. I can do a market sell here, right? Put my stop loss so that if this does break clearly through this resistance, then okay, I'm out. If we get a breakthrough candle in the opposite direction, then the same thing here when it broke through below this price and it carried on. If it breaks through far enough above, we could see it carry on to the next resistance level. So if you're shorting it with a market sell, you can put your take profit, just before today's low, maybe it could push back down there. And so I've got a much better potential profit than risk. We understand fundamentally why gold dropped, strengthening USD and some fear on the markets, which strengthened the US dollar. And so this could be an opportunistic entry point if you feel gold could get pulled back down to today's low with the strengthening US dollar. Okay, with the fear that's on the market, because it's not necessarily inflationary fear today. It's some other fears that are hitting the market potentially, and so we could see gold get pulled down again. So that's the market move, right? What kind of pending order could we put up here just in case there is a breakthrough candle? If inflationary fears take over and there is a breakthrough candle, and there still are inflationary fears out there, we know that housing prices just hit a high. The median price is above 400,000 in the U.S. Retail confidence is up. We know people are buying things. There's a supply chain problem which could drive prices up. So there could be inflation still. What we know now is U.S. dollar strengthening, so market sell makes sense. What we also know is there are inflation fears. If that's confirmed with a breakthrough candle through this resistance, you could buy from up here. What kind of pending order would buy from a higher price if that resistance level breaks through? If we get a breakthrough candle and it hits up here, what kind of pending order buys from that higher price? We just did the example on oil. Buy limit or buy stop? Correct. It's a buy stop pending order. So we go here, we say buy stop, and if gold breaks through and hits a price of say 17.95, then perhaps you deem that to be a breakthrough of the resistance, and maybe at that point you want to buy. And then you say, okay, the next resistance is way up here, like 1804, or even higher at this high point up here, 1809. So maybe you compromise, you say about 1807, before that second resistance, you would take profit, as an example. Okay, and take profits on this side. And my stop loss, then, if I'm buying from up here, would make sense to have my stop loss back below that broken resistance, because it should act as support now if it does get broken. And so your stop loss being somewhere down here, say 1790, could make sense. Take profit, 1807. Sorry. Stop loss, 1890 or 1790. Okay, so I'm risking $5 to my stop loss per ounce, and I'm going after a profit of $12 per ounce. And maybe I say, okay, 2-to-1 ratio is good enough for me, so let's go to 1805 for my take profit. And so now I'm going after $10 per ounce profit. That'll get me out before all this resistance up here, and only risking $5 per ounce on my buy stop pending order. Okay, so now I'm covered. I'm trading with the fundamental situation right now. Fear on the markets with the volatility index up. We understand why the stock market surged up a bit before pulling back right now, because of the tech stocks earnings reports, but the bigger picture is supply chain problems, maybe some inflation fears that are causing the volatility index to be so high and the US dollar to strengthen. So fundamentally, we see a reason to sell from this resistance, and we see it's moving in our favor. We also understand that the fundamental news can change. Inflation fears could take over and cause gold to go up, and that could weaken the USD if inflation fears are the main reason for the fear. Right now, there are fears of supply chain and other things and COVID. So, by the way, COVID, there's some areas spreading around the world again, and we've got this loan problem in China. The housing industry, big housing giant there that's defaulting on loans and things. And so we understand why the US dollar could strengthen and gold could drop. But we talked about the unexpected type of fundamental news, right? So if a headline hits that makes the overriding fear more just inflationary fear, and these other fears are overtaken by inflationary fear, then we could see the resistance in a breakthrough candle. So we're preparing for unexpected headline that can drive gold up through the resistance, and you have a buy stop waiting. And we're trading with what we know, selling that we see the reason why the US dollar is strengthening right now. Okay, so nothing wrong with trading with what you know now, preparing for what could happen in the opposite direction. And again, if you have any questions, please ask. Please ask your questions. Okay, Robert, you're asking, can you trade something like oil every day with fundamental and technical analysis? The answer is, of course. Absolutely, you can trade every day. Some people are day traders and they're trading each day, opening and closing trades before the news has a chance to change, right? If you know what the fundamental news is right now, and you get in from a good entry point and you're in profit and you close it and take that profit before the fundamental news changes, then the fundamental news stays on your side. You know, if you're holding trades longer and you're not trading each day, okay, you're trading on bigger picture fundamental ideas, right? Which is okay as well. But then you have to get through the bumps as the news changes each day and each week if you're a longer term trader. But certainly you can trade each day, you can trade each hour for that matter. You're seeing how easy it is in the short term. Gold's dropping off this resistance. And if I took a larger trade, instead of being up 46 cents, I could be up $46 in that short period of time, or 460, depending on the size of your balance and the size of that trade. And that's called scalping, if you're getting in and out quick. Okay, Robert, you can see the concept I'm using here with the stop loss and take profit. I'm using the price levels of support and resistance where we see it had trouble dropping below and then it took momentum to get below. Now it's having trouble getting above. That's an important price level. So if I'm selling, my stop loss probably makes sense to be above that because there's resistance here for it to go up and hurt me. But if it does break through, then you could see a surge. So it makes sense to have your stop loss on the other side of that price level. And the same thing, if it breaks through and triggers our buy, it makes sense to have my stop loss below that price level. Okay, so someone asked about natural gas. So let's have a look. Let's have a look. What tends to happen before we look at natural gas? What tends to happen to the price of natural gas if there are supply fears for energy? Oil was going up, right? And so you might expect some bullishness with natural gas as well. So we look at natural gas, and I hadn't even looked at the chart, and look, it's bullish, right? It's going up for the last 1, 2, 3, 4, 5, 6, 7, 8, 9 or so 30-minute candles. So after a brief pullback, up goes natural gas. And actually, I'm looking at, we're looking at the proper chart here. So we see a gap coming out of the weekend, right? A gap up coming out of the weekend. That's a sign of a bullish week ahead. Okay, little tricks of the trade. If you see a large upward gap when the Friday's close price and Monday's open price or Sunday night's open, there's that big of a jump. Two things you can look at technically. That should act as a support level, which it did. Support, 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 and up it went through the week. As it came down, it got near that support and up it went again. So that's an easy spot to see support and buy when it got near here, as long as the fundamental news was still on your side. Was the fundamental news on the side of natural gas to go up? Yes, for two reasons. One is supply concerns for oil and the energy industry, and also the economies are roaring back for the most part in many places coming out of the COVID crisis. And so we see the inflation of many prices around the world with products, including energy. All right. I know gas prices at the pump are getting out of hand. The fuel costs are going up. So when you saw this pull back with the strengthening US dollar, you could predict maybe that it would bounce off this price. And so as it got near this support level, it made sense to buy here, right? And by the way, if the price re-enters the gap, a technical strategy is to trade the gap, meaning if it enters the gap, then it tends to fill the gap back towards the old resistance, which should act as support. So if this came down and broke through, you could have a pending sell stop right down below this price. You could program one now for the future. You put a sell stop below this support level, and if it breaks below sometime in the future, then maybe there's enough momentum to carry to the bottom of the gap. It's called trading the gap. And for that matter, then you could have a buy stop waiting at the bottom of the gap for it to bounce back up, because that should act as support at the bottom of the gap. That's the strategy of trading the gap. Okay, so at the same time, when this gapped up on Monday, that once it established that it's respecting the support, you could have bought. You also could have prepared a sell stop in case it reversed and broke back into the gap. Okay, but we're understanding the fundamentals here as to why this bounced off the support and did not re-enter the gap. Okay, we've got in general a relatively weak US dollar. We've got increasing demand for energy, especially as we head towards the winter months in a lot of areas. Less daylight, more energy needed to heat things and for power. And all these predictions of $100, $95 per barrel oil as well. So all of this makes sense why this is rising. So if you're already in on this and you bought on natural gas, you could consider a take profit at this resistance level up here, right? This is a natural spot of resistance, this high point here. Doesn't mean it won't go past there, but that's a spot where it could at least temporarily hesitate. And by the way, if you had a trade running and you said, I'm afraid it could pull back down, maybe the news is going to change and you like the profit you're in, you could do a partial close, right? Like this gold trade, for example. If I right click and I say, let me modify this, let me switch from modify to market execution, and I have the option to close my trade now. Okay, I brought up the trade by right clicking over it down here. Then I switch it to market execution, and I have three options: to do another position to sell or buy, or to close the current position. And what I can do is say, okay, I like my profit, let's say. I put part of the trade size, 0.01. Now it tells me that's how much I'll close. Instead of the whole trade, I'm doing a partial close. And so I'm up $1.60, I close it. Look, now I'm only up 80. Why? Because 80 cents went to my pocket, went to my balance now. So I did a partial close. I also could then say, I want to move my stop loss to my entry price. I could do that. So let me go back to gold, bring the chart up. And I say, let me move then my stop loss that I had down here. I could move up and say, okay, I'm going to only risk half of that, not to my entry, but halfway to my entry. Now I'm guaranteed a profit, and I have the potential to make more profit. I've pocketed half of the position at a nice profit, let's say, and obviously if it was a larger trade size, it would be obviously a more significant profit. And now I'm kind of riding risk free here. If it goes down and hits the stop loss, then great, I'm okay. I still have an overall profit, right? So these are some things you can do for managing risk and taking profit, etc. Partial closes and things like that. Any questions on any of this so far? Okay, great. And yeah, I mean, you tend to see trades running your way more than going against you when the fundamental news is on your side. So, you know, similar trade sizes, one was up double what the other was down. I closed half and now I'm even. You know, I'm losing on oil about what I'm up on gold, but remember we closed half of gold, so we already made a profit. Could close all three of them and we're in profit. And so when you go with the momentum, as it is now, as you understand the fundamental news as it is now in the headlines, then you tend to be able to ride that momentum a bit. And if you get in and out while the momentum is still there, maybe I'm winning 2 for every 1 I lose sometimes, or breaking even and then winning 2 for every 1 I lose, that sort of thing. And you know, the one that's losing has less momentum against you than the one that's winning has momentum for you, because the momentum's on your side when you're trading with the fundamental news. And you'll find that happens a lot of times, okay? And if you start scalping and closing things off early, you say, wow, okay. So on one, I lost 44 cents. If we go to the account history, we say on one, we lost 44 cents. On the other two, we gained $1.60 or so. And that's, you know, the method of catching the fundamental news, finding the momentum, trading on what it is now. And don't forget, we have pending orders waiting in case the momentum changes, waiting for the breakthrough of a significant price level to confirm a shift in momentum. And so we can pocket the market moves and keep the pending orders waiting to see if there's a big reversal. Yeah, you can't, Gabriel, you're right. You cannot do a partial close on 0.01 because that's the smallest trade size. So I had 0.02, which allowed me to close half of it. If I had 0.05, I could have closed any portion of that to as small as 0.01. Okay, that's the smallest increment, 0.01. Okay, I think this is a good spot to stop. One thing I will say is we can see there's been a reversal of the indices. They were rising up the new highs, but look at the resistance now and look at the pullback. So you could be looking potentially to short the indices if you think fear is taking over now, as the excitement about the tech stocks maybe has worn off, and you could put your stop loss above today's highs. You know, if it's a mixed market and there's fear, maybe the stocks aren't going to break to a new high today. Maybe they're going to pull back now with the strengthening USD and the strengthening levels of fear. And so whether you're looking at the DAX or a US indice, the same could hold true, even for the China 50, etc. Okay, we see a pullback of a lot of these indices are starting to occur right now. Just a quick insight if you're trading on the indices. All right, everybody, thank you for joining. I'm glad that the comments have been great, so I'm glad you all are enjoying it and finding it useful. We'll have another session on Thursday earlier than this evening. Thursday's session is at 11 a.m. UK time. All right, everybody, thank you for joining. Bye for now.